Hello and welcome to the channel, your go-to source for understanding the complex world of hard-to-borrow stocks and potential short squeeze plays. Today, we're diving deep into a specific name that has popped up on our screener, Edible Garden AG Incorporated, ticker EDBL. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Show logo and stock chart. Let's zoom in on EDBL, Edible Garden AG Incorporated. This company operates in the consumer defensive sector, specifically within farm products. They specialize in controlled environment agriculture, producing fresh, packaged herbs like cilantro, rosemary, basil, and even living lettuces. Think cutting-edge farming for your grocery store shelves. EDBL is a micro-cap stock with a current market capitalization of approximately $1.06 million. Looking at the recent price action, it's been a turbulent ride. Highlight numbers on screen. Today, EDBL is up plus 1.63%. But over the last 5 days, it's down a significant minus 20.70%, and over the last 30 days, we've seen a staggering minus 73.14% drop. Volume-wise, today's activity stands at 189,292 shares, which is quite low compared to its 30-day average volume of 2,085,494 shares. That gives us a relative volume of just 0.1x average today. This stock also has an incredibly tight estimated float of only 0.1 million shares, making it extremely illiquid and potentially volatile. What is cost to borrow and why it matters? So, why are we talking about EDBL? It all comes down to something called the cost to borrow, or CTB. If you're new to this, let's quickly break it down. When someone wants to bet against a stock, they short sell it. This means they borrow shares from a broker, sell them immediately hoping the price will drop. If it does, they buy them back at a lower price, return them to the lender, and pocket the difference. But borrowing shares isn't free. Short sellers have to pay a fee and interest rate to borrow those shares. That's the cost to borrow. And here's why it matters. A high CTB signals that a stock is hard to borrow. This usually means there's either very high demand from short sellers, or a very limited supply of shares available to borrow, often both. These fees are annualized, so when you see numbers over 100%, it means short sellers are paying an incredibly high interest rate just to maintain their position. Why this stock is hard to borrow right now. Display CTB numbers prominently. Now, let's talk about EDBL specific numbers that make it stand out. The cost to borrow fee for Edible Garden AG is currently an eye-watering 802.0% annualized. That is a massive percentage, making it one of the most expensive stocks to short right now. Combine that with the estimated float of just 0.1 million shares and you start to see why this stock is considered hard to borrow. A tiny float means there are very few shares circulating and even fewer available for lending. Our data indicates that the shares currently available to borrow are unknown, which often implies they are extremely scarce, possibly even zero at times. Our internal composite squeeze score for EDBL sits at 47.1 out of 100, putting it squarely on our radar for potential volatility. Squeeze mechanics explained. So, what happens when a stock like EDBL becomes hard to borrow with such a high CTB? Short sellers are essentially bleeding money every single day just to keep their bets against the company. If the stock price starts to tick up, even slightly, these short positions quickly become unprofitable, and the mounting interest fees become unsustainable. This can trigger what we call a short squeeze. When short sellers can no longer bear the cost or the risk, they are forced to cover their positions. To cover, they must buy back the shares they initially borrowed and sold. This sudden demand for shares creates buying pressure. This buying pressure drives the price higher, which then forces even more short sellers to cover, creating a rapid, explosive upward price movement. It's a chain reaction, but remember, a high cost to borrow doesn't guarantee a squeeze, it simply indicates the ingredients for one could be present. Short sellers might also have strong conviction that the price will continue to fall even at these high fees. Dilution risk check. One critical factor to assess for any potential squeeze candidate is dilution risk. Dilution occurs when a company issues new shares, increasing the total number of shares outstanding. This typically reduces the value of each existing share, similar to slicing a pizza into more pieces. Each slice gets smaller. For EDBL, we found no recent diluted SEC filings such as -1, -3, or 424B in the last 90 days. This is good news for a squeeze thesis because dilution can provide short sellers with an easy way to cover their positions, or simply depress the price, completely negating any short squeeze momentum. Recent reverse split watch. Highlight date and ratio on screen. Now, this is a very important point for EDBL. The company executed a 1:45 reverse stock split just 17 days ago, on July 13, 2026. A reverse split is essentially the opposite of a regular stock split. It reduces the total number of outstanding shares and proportionally increases the share price. So, if you own 45 shares, you now own 1 share, but its value would be 45 times higher, theoretically. For microcap stocks like EDBL, reverse splits have a few key implications. First, they reduce the available float even further, potentially intensifying volatility. Second, they reset the share price higher, often to meet exchange listing requirements. Historically, we've observed a pattern where many microcap stocks tend to see renewed volatility or even a price pop within about a month after a reverse split. This isn't a guarantee, but it's a tendency seen in some names as the market digests the new share structure and resets its expectations. It effectively wipes the slate clean for new price action. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. So, with EDBL and its 802% cost to borrow, what should you be watching for? Show chart with key levels. First, look for a significant increase in volume. Today's volume is only 0.1x its average, so a sudden spike above that average, especially sustained, would be a key indicator. Second, watch for consistent upward price momentum. A short squeeze needs buying pressure to ignite. Third, keep an eye on the borrow desk data if it becomes available. A shrinking supply of shares to borrow would confirm the scarcity. Finally, any news or positive catalysts from edible garden AGE or within the broader consumer defensive/farm product sector could provide the spark. However, it's crucial to remember that high CTB also means short sellers have strong conviction, and EDBL has been trending heavily downward, losing 73% in the last 30 days. This means the shorts have been right so far, and the stock could continue to decline. Edible Garden AD Incorporated, EDBL, presents an interesting case study with its astronomical 802% cost to borrow, extremely tight 0.1 million share float, and recent reverse stock split. These are all elements that can contribute to a highly volatile situation. But remember, the world of microcap stocks and short squeezes is incredibly risky, and a high cost to borrow is only one piece of a very complex puzzle. Always conduct your own thorough due diligence before considering any investment. If you found this deep dive into EDBL insightful, please like this video, subscribe to our channel for more hard-to-borrow stock analysis, and let us know in the comments what other tickers you'd like us to investigate. Thanks for watching, and happy researching.